Yeah, morning trades. Look, another pretty lively trading session. Certainly FX market seeing some life. I think on one hand, you still got a market that was dissecting the Fed meeting and the timing that's implied by the rates market, certainly the March meeting, still very much preferred by the market's eyes. But then you've seen some pretty good data. Retail sales increased 0.3%, certainly better than expected. The claims number coming in at 202,000 was lower than expected as well. Then we went into the central bank plethora coming through. One that really sort of sprung out was the Norges Bank, where the Norges Bank raised by 25 basis points. I think the market was pricing about 3 basis points of hikes. So certainly a surprise relative to market pricing. And we've seen the NOK absolutely flying on the day, certainly big volumes playing through there and strong price action. Also given a big tailwind by the fact that we're seeing Brent prices up over 3%. So some of the petrocurrencies getting a boost from that as well. But elsewhere, we've seen the Swiss National Bank, we've seen the Bank of England meeting coming out, modestly hawkish, you could say. We've seen a 6-3 split, so there's 3 members still calling for hikes, higher for longer, still very much the mantra of the Bank of England are playing there. And then we've seen the Banxico meeting, and we've seen the ECB meeting, which I think was certainly widely dissected as well. And I think, unlike the Federal Reserve, the ECB have pushed back on market pricing by some degree. They've said that they're united in expecting cuts later than the market pricing. Lagarde said she's not going to let down her guard or their guards, and certainly that's a kind of defiant stance. They have lowered their GDP forecast for next year to 80 basis points. They've kept them on unchanged for 2025 at 1.5%, and there's been a big focus on PEP reinvestments, or the so-called quantitative tightening. And they're going to be looking to reduce that balance sheet or let it run off $7.5 billion on average per month in the second half of next year. Now, that's probably a bit later than the market was looking for, so you could say that's modestly dovish. But generally speaking, the pushback is sort of at odds with what we've been seeing from the Federal Reserve. Now, Euro has been an outperformer on the trading session. We've seen euro dollar push up to 110, which is a little bit shy of that level again. But I wouldn't surprise if we saw went and retested those levels. If we go and look at German bunds and the reaction we've seen there, look, on the net change on the day, we are lower across the curve like we are on gilts, but the yields have certainly moved strongly off their lows. And there's been selling after the ECB meeting. If you have a look at 2-year German bunds, that was down at 246 on the lows. We're now trading at 256, as I say. So yields have come up a little bit of selling playing through. The pound's obviously been well traded as well. That's pushed up quite nicely into 128. We pulled back a little bit from that point. But again, we've seen selling in gilts really from those lows of the day. So the net change low on the day, as is US Treasuries, but the yields have come nicely off their lows. Now, the US dollar's also been shunned. We've seen the US dollar broadly lower against all G10 currencies and across the sort of EM space as well. Certainly some good gains coming through in the South African rand and Chilean peso as well. And really, it's only the MEX that's down on the day. On the equity side, well, I think, if you have a look at the intraday tape of the NASDAQ, there was a bit of a sell-off sort of 3/4 of the way through the session. We have stabilised, and as we come into the sort of close in the last hour or so, we'll see what the price action is there as well. We do have the NASDAQ down very smalls as I speak at the moment. The S&P is pretty flat. We've got the outperformance once again in the Russell. That's really where, the gains have been taking place. Everyone's looking at that as an outperformance for 2024. And I think they're front running that now. I think people are actually putting those positions on as we speak. Now, if you have a look in the S&P, it's energy, which is firing up. The sector's up 2.7%. Obviously, that's not going to surprise given what we've been seeing in the energy complex. But good gains as well in materials, and financials look okay in this situation as well. Now, in the session that we're going to be looking at, there's a lot of event risk to play through. We've got European PMI numbers, manufacturing and services numbers there. We've also got UK manufacturing and services numbers as well. And in China, through the trading session today, we're going to be looking at industrial production, fixed asset investment and retail sales, where retail sales are expected to jump up about 12.5% or so. So definitely one to watch. The other factor that we want to look at is just looking at rates pricing. The race is on at the moment to see who is going to be looking to cut first. Now, if we have a look at March pricing, we know that the Swiss are right in contention with that. There's about an 80% chance that they cut in the March meeting. But in Europe, in the US, you can see a situation where we've got about 90% chance of a rate cut coming through by March, 150 basis points by the end of next year. Europe, that's now priced at 66% chance, about 150 basis points priced in by the end of the year. And in the UK, it's about 27% chance, so a little bit lower there. So it's really a toss-up at the moment between the Fed, the ECB and the Swiss National Bank. And probably the ECB is going to get it by virtue of the fact that their meeting is before everyone else's. Anyway, in big session ahead, trade at Pepperstone.